I thought that this was a really fantastic quarter. You have the analysts who don't know what to do. They really don't, because they've been wrong. David, they've been so wrong that it's better just to say, you know what? I never really understood the valuation, but I do think the company's a pretty good company.
As far as the ZEV credits, the simple fact is this. Tesla is eating their competitors' lunch, and they're making them pay for it. That's a pretty cool trick.
Alright, welcome back everyone, both new and old. To those that are new, feel free to drop a like and comment below. What's your price targets for the coming year for Tesla? That'd be awesome to hear. And if you're willing to join our Discord, a link will be provided below. Got a great community kicking about there. Today we're going to be deep diving into Tesla's earnings with Jim Cramer and solving the money problem. So this will be a good video to kind of share our own perspectives and discuss what we agree and disagree with. Right, let's crack on.
I thought that this was a really fantastic quarter. A couple reasons. One is that if you look at the financials of Tesla, they are as clean as can be. And I could argue that this company is doing incredibly well. The conference call was a conference call that reminds me of people who just want to tell the truth, straight as can be. Elon Musk, I'm not saying he's restrained or he's in a straitjacket, but what a terrific conference call. It's very hard to think negatively about this company. I know that there are people who talk, obviously, valuation, but there are a couple upgrades today. And I think they can't fight it. It's the reason why they can't fight it is because when everything works, it's very difficult to argue what the price should be, because right now this company is doing incredibly well. And if they make as many cars as they say, what you're going to say is, you know what? I know that it sells at a gigantic price to earnings, well, price to multiple, whatever. But David, when I read through the Tesla notes, what I read are analysts who are just saying, you know what? I can't fight it anymore. I have to like it.
Yeah, I did notice one of those. Fashionably late.
Yeah, that's a good title.
Yeah. Baird upgrading to outperform. I mean, fashionably, look at the move in that stock. At this point, I'm not sure you want to weigh in and say you're upgrading now. That's pretty embarrassing.
Is it just me, or has the tone really changed in the last 6-12 months on CNBC? I mean, David literally just said that it's embarrassing to be an analyst now who's finally coming to the party and going, oh, hey guys, I just upgraded Tesla stock. I finally get it. Oh, look at me. I finally get it. Yeah. Now, don't get me wrong here. It's definitely better late than never. Shout out Gordon Johnson. But it really does seem like the tone has changed in the mainstream finance media, at least on one of these networks. A couple of years ago, people were mocking Tesla left, right, and center. They had short shills, bears, clowns, dingbats, morons, and plenty of stuff in between. Very few people having a reasonable discussion about Tesla. They couldn't get past a quarterly loss or next quarter or next week. Now, suddenly, people are seeing the big picture and realizing the inevitability of what Tesla's going to do. Now, I don't want to labor the point, but it really does matter what's being said on the mainstream finance media networks regarding Tesla. This affects widespread sentiment, and that causes people to make decisions such as buying or selling securities. So this really does matter. The mainstream finance media narrative has done a 180 in the span of 12 months. From Tesla sucks, they're going bankrupt, stay away, to nobody's catching Tesla, rip legacy auto.
Yeah, and I just wanted to add to that. With these analysts continuously pricing Tesla wrong, they lose credibility to the point where people just won't give them their money to provide their hedges. It's one of these things that if you're continually saying that something's going to go down and it goes up, nobody's going to believe you.
But Jim, when you get to the metrics that you're looking at to try to determine what a price should be, granted, if this company is operating extraordinarily well, I still wonder, what is an appropriate multiple? I mean, they still largely are. I mean, again, you argue they're a technology company.
Well, that's what I find. I'm going to talk about this. Argue? You have to. I mean, this morning there are two price target bumps for Ford. Now, I happen to think Ford's doing extremely well because they've decided to not lose as much money as they used to.
Ooh, Jim Cramer, what a savage. I mean, I like it, but wow.
I mean, it's just ridiculous. Your argument is that Tesla's a technology company. Of course it is, you fool. Of course it is. They have FSD. They have data coming from every single Tesla in the fleet sent to their networks to further improve their beta that's just been released. You know, it just doesn't, it blows my mind that these guys even have to it's like saying that the sun is yellow. Of course it is.
We're talking about JP Morgan going from 7 to 9, Barclays 8 to 9. But you know what, David? These are companies that are bound by the conventional four walls of the spreadsheet. People are not going to give Ford any of the credit because they don't like this whole model. I had Mr. Fisker on last night, and basically what those guys do is make a car, okay? And it sells because it's great looking. And that's what I feel about Elon Musk. He makes cars, but he's fully integrated. The cars, he can do 500, whatever he sells, whatever he makes, he's going to sell. There's no dealer network. And now he's starting to say the same thing in China. So what you see is a frictionless model. So you have the analysts who don't know what to do. They really don't because they've been wrong. David, they've been so wrong that it's better just to say, you know what? I never really understood the valuation, but I do think the company's a pretty good company.
This is a great point from Jim. As many of us know, so many analysts have been so wrong for so long. However, I beg to differ just marginally in terms of Jim's suggestion to these analysts of just going, well, I don't know what the fuck's going on. I never have. But hey, I like the company. I would much rather these analysts who don't know what the fuck's going on with Tesla, and again, this isn't to disparage them. This is just some genuine, well-meaning advice, is to just shut the fuck up. Again, this isn't like coming from a place of hate or anger. I just literally mean shut the fuck up until you know what you're talking about, then talk, or preface your analysis, your price targets, etc. with, I've been completely wrong the entire time. I still don't know what the fuck I'm talking about, but here's what I think. Because if analysts are going out there and being so incredibly, embarrassingly wrong about a company for so long, they lose credibility. It's better to explain you don't know what you're talking about, but here's what you think, or just don't talk. I mean, am I crazy? Like, do you guys agree? Let me know in the comments. Should an analyst who doesn't have a high level of confidence in their analysis just not provide it, or explain that they don't have a high level of confidence? I think that's probably a good way to operate because you're less likely to get roasted on a random YouTube video that way. Just saying.
Make that double. I mean, I completely agree with Stephen. That's exactly what I said earlier. But you've got to keep in mind, from my perspective, the majority of Wall Street aren't genuine to the point where a lot of these guys who are bearish on Tesla have bias towards it. Maybe they're in a short position. Maybe they're oil shells. Who knows? He mentioned Gordon Johnston, for instance. Like, do you genuinely believe there's a dude that stupid? I mean, Dave Lee is probably one of the oldest OGs in Tesla in the YouTube game, and even he gets irritated at him. Do you honestly think there's a person so unbelievably ignorant, or, just hypothetically speaking, because I could be totally wrong, they might be getting paid?
And that's where these people are coming down. It's amazing. I can't think of another place and time I've ever seen it.
No, really?
No.
That is a massive call from Cramer to suggest, remember, this guy has been in the stock game for decades, ran his own hedge fund. I mean, you don't need me to explain who Cramer is. The fact that he, of all of the companies and stocks he's ever looked at, has never seen anything like the disconnect between analyst consensus around Tesla and the reality is huge.
It's really eye-opening because I remember Cramer back in the day really bearish on Tesla, and you know, after the interview that he had with Tesla Daily with Rob Maurer, his whole entire ego has shifted from one end to the other. You can even see in the interview himself he's starting to really open his eyes to it, and he's a lot more open-minded to it. And it's people like this, like Stephen said, that really shift the change in the majority of retail investors, because a lot of people see CNBC as a reputable platform, and so by listening to Jim saying yes, Tesla's good, is also going to make the stock go higher in the long term. That's really good to hear.
I mean, where a company is just, where a CEO is masterful, where a company has done amazing things, and the financials no longer seem. Remember all the short sellers would call you and say the financials are phony. You take a look at them, maybe this or that.
Yes.
You know, Carl, I know the credits matter, but what really matters, I think, with Tesla's is that it's flawless. Flawless execution. Even in a time of COVID, they ended up doing everything right. And Carl, I just read it and I think if this were a tech company, it deserves to sell exactly where it's selling.
Just give me a quick take, your quick take on sort of this quarter and how it fits into what we've been seeing lately from Tesla.
They are much more consistent about turning a profit, David. And I know there will be some people who will say, well, look, without the zero-emission vehicle credits that they received from other companies who bought them from Tesla so they could offset their carbon emissions standards that they weren't meeting, whether it's in Europe or the U.S. or wherever, that doesn't matter. That's part of the game. And you shouldn't hold that against Tesla. Fact of the matter is it was a fifth profitable quarter. Now, going forward, what stood out, and especially during the conference call, they talked about this, they're going to be ramping up production. gigaberlin and gigatexas, that's the plant that's being built in Austin, they'll start production late next year. It's not going to be big volume, but this is this period here, David, where we see over the next year to 2 years to 3 years where you're going to see big ramp up in production from Tesla.
Going to be demand for that ramp up in production?
They believe there will be. Now, remember, you've got the Tesla Semi. The question becomes how many companies are going to say, yeah, we do want that electric Semi coming out of the Gigafactory in Texas. The Cybertruck, we've talked about that. And then Berlin, I definitely think there's going to be demand there. I mean, Europe is a market where electric vehicles, there is demand. And as countries are mandating you need electric vehicles there, you will see that definitely take off.
There's definitely no question over demand. There's just a question over people's ability to infer future demand based on the economics of electric vehicles. I mean, I guess we'll just have to wait and see for the doubters out there, but I'm telling you guys now, 10 years' time, the majority of new vehicles being produced will be electric. Most of the companies that used to produce internal combustion engine vehicles will be bankrupt. Tesla will be dominating, and hopefully there's a few other players that are chasing Tesla in a distant second, third, fourth, and fifth. Remember, the Berlin Gigafactory alone will ultimately ramp to 2 million vehicles per year. Yes, Tesla has confirmed this. 2 million vehicles per year just from the Berlin Gigafactory. Things are just getting started.
Adding on to that, Tesla is very logical and methodical, and their vertical integration is second to none. There's nobody else on the planet that has that level of vertical integration. And with that being said, at the moment, the demand is not a problem. It is the supply. And the supply, where is it? It's the batteries. What were we told in Battery Investor Day? How to fix that. So they're constantly innovating. They've got a creative environment to allow all their employees to push the innovation. They just can't be stopped.
Phil, I've got to know what your take is on the sale of these regulatory credits, 4 quarters in a row in which they would not have turned a profit without them. But so much of the demand picture seems to overshadow that.
It does overshadow that. And I guess the thing that I come back to is everyone says, well, they wouldn't be profitable without that. But that is part of the game here. And it's in the auto industry. I never hear anybody say, you know, this particular automaker had to spend X $100 million for ZEV credits so that they don't get dinged for their sales in Europe. Why is it never on the other end? It's only with regard to Tesla. I understand that people say, strictly looking at the operations, they would not have turned a profit. But they are continuing to grow their sales. Their gross margins improved substantially. I think, generally speaking, the ZEV credits, to a certain extent, it's a bit overplayed by those who do not believe in the Tesla story or who want to discredit them turning a profit.
I completely agree with Phil on this point. I've covered it many times in the past. The regulatory credits are part of the competitive landscape. They're available. Tesla has big brains managing their money. They go, oh, we can get some credits. We can factor that revenue in. We can use some of that money to expand our production, reduce our costs, invest in new equipment, instead of pleasing morons who think that we can't make a profit without those regulatory credits. And actually, I don't really think these people are morons. Honestly, I think they're pretty smart individuals just trying to fiddle and play with the numbers and spin things for a bearish narrative because maybe they're short. Maybe they're a paid oil shill. Maybe they just want to see Elon Musk fail because it'll make them feel better about their life. Just saying.
I mean, when it comes down to regulatory credits, you can think of it like you're working your job, a bunch of other employees who are in the exact same industry need something that you have, and they really need it or else they're going to get fined shitless for it. And so they're willing to pay for it. And then you can then use that money that those employees are giving to you to then push your innovation and push your work even harder. It's so ironic.
Steve, we know you've been a believer in the Tesla story for some time. I mean, this year has, of course, been incredible as we've watched the stock price move up, as we've said, over 400%. But from here, Steve, do you really think there's more, even given the success of the company, that can be done? Or do you need to believe that Tesla, as many say, is more than a car company?
Well, look, there are a couple of points here. First, you just have to stop and acknowledge Tesla's killed it. This is a stunning quarter. Sold, 139,000 vehicles. They're on track to 500,000 vehicles when Elon Musk said they were going to hit 500,000. That sounded like a pipe dream. Now they're doing it. Second, record quarter, $8.77 billion. Just so people understand, that's a 40% uptick from just last quarter. So they're bringing all these new products to market. By the way, not just the Semi, Cybertruck in the wings, over 600,000 orders. And to me, most interestingly, a $25,000 car that could be 2.5 years out. That is when you start seeing Tesla being the #1 selling car in the country, electric or gas.
That is a massive call from Steve, but I think he's onto something. Just picture this, 2.5, 3 years into the future, Tesla has a $25,000 electric vehicle with autopilot, full autonomy available as an option or a subscription as well. How does anyone compete with that? They don't.
This is exactly what I said in my last video. Like, people make the mistake that Cybertruck, Semi, all these brand new lines that are coming into production is going to be the big bomb for Tesla. It's not. It's not. Let's just emphasize this point here. It is the $25,000 car. And both Steve from Solving the Money Problem and the analysts know this as well. They know this very, very well. Cybertruck, Semis, these are stepping stones to take over a bit of the market. The $25,000 EV is the one that dominates the market.
So I think there is some headroom. But you got to pause here for a minute and take a breath and say, at $430 a share, $405 billion market cap, and I love Tesla, but that means that Tesla is valued as highly as Volkswagen, Daimler, BMW, General Motors, Ferrari, Ford, Honda, and Hyundai, all put together. So look, I think there could be some turbulent times here. By the way, as far as the ZEV credits, the simple fact is this: Tesla is eating their competitors' lunch, and they're making them pay for it. That's a pretty cool trick.
What a great point to wrap this video up on. I mean, just brilliantly articulated. Whether or not you think Tesla can't make a profit with or without regulatory credits, how about we flip the script and just consider this fact. The companies that are attempting to catch up to Tesla currently are paying Tesla to get further ahead because said companies can't build electric vehicles fast enough because they're so far behind.
I mean, just on that note, a lot of these old legacy car makers tend to outsource pretty much everything. The whole supply chain is all over the place. I mean, even back when Tesla was first founded, before Elon became the CEO and they were scaling up the Roadster, not a lot of people know that Tesla almost became bankrupt because of contracting to other people to get stuff done. Like, this is what almost completely destroyed the company until Elon stepped in. That's why it's so important to the company. But it's at a point now, just like with Steve Jobs and Apple, that even without the head, it's still going to succeed very well. On that note, if you've liked the video so far, feel free to like, comment, and subscribe if you're new below. Helps me push out more videos and encourages me to grow. And once again, have a nice day. Hope you enjoyed this type of content, and I'll see you next time. Bye!